All right, Chapter 13, Minimum Rate, Long Canon. Interstate Commerce Act it prohibits the railroad from setting rails below a reasonable minimum level cost play for the essential role of evaluating minimum rate reasonableness. Interstate Commerce Act contains three factors known as the Long Canon factor, which concern providing interstate commerce with determining whether the rate exceeds the reasonable maximum level. 1. The amount of the traffic transported with the revenues do not contribute to going with the concern with the efforts made to minimize such traffic. The amount of the traffic contributed or manageable to fixed tourist cost effective the rates for any of the rates of such traffic can be changed with the maximum revenue such for the traffic. Carrier the mix rail traffic determines whether the commodity is planning with an unreasonable share of the carrier's overall responsibility. The railroad accounting principle. Consider the first long canon the factor which use the same type of the cost that those used for the minimum rate preceding it does not consider the second and third long canon factors because of the protecting management and preserving price and efficiency cost subsidiary consideration whether the role of the cost and not clearly confined to the subsequent reference to the long canon off therefore only pertain first long canon factor. The interstate commerce responsible for rate setting decision of the railroad accounting principle does not attempt to establish and minimize the rate. The railroad accounting principle resides under the minimum rate long canon cost and only determine the minimum cost which may be recovered to contribute to the underneath going concern value. All right, application of principle to the minimum rate and long canon cost. The casualty hosman generally practical cost of capitalist asset valuation related expense principles apply to the determination of minimum rate long canon cost. Casualty. The two aspects of the casualty principle are pertinent to the application of avoidable. The time of operation avoidable applied with the minimum rate of long case with the meaning with the cost must be would and not be incurred with the movement of the traffic under the consideration, or the cost may be recovered with the traffic contributed with the railroads going of the cost concerning cost. The time oration cost of the applied with the minimum long term canon system means with the time of the period with the rate of the under consideration would they apply with the coincide with the period with which the cost implies. And generally, the length of the time period of the movement increased with the capacity related with the capital cost become more flexible. Consequently, a movement in the short run time period designated with the take advantage of the excessive capacity may incur with little, if any, of the additional capital cost. On the other hand, with the movement over the long-term period may require additional capital cost for the retention of the capital cost, otherwise be liquidated. Or your homogeneity principle requires the use of the average cost of the resource for the use for the interchange. In the case of the minimum rate of the application for the example, the railroad form A and the uniform railroad cost system average variable cost per gross ton mile, including the items must be the locomotive fuel cost, the locomotive maintenance cost, and the track maintenance cost. Maybe used to compute the line haul cost of landing. The amount of each of the resources consumed and the per ton mile is the same regardless of whether the tons miles are generated with particular traffic under consideration by some other trafficker. Practicality. Use the component of the general purpose of the costing system is applicable to practical principle. For example, because of the conducting the site-specific studies, the estimate of the applicable cost of the prohibitive cost when compared to the relatively reliable form of short movement, the average variable cost for the applicable type of the activity may be obtained with the general purpose costing system. The cost of the capital. The extent of the capital cost relevant to the maximum relative to the minimum rate in the long canon cost of the capital rate to the be applied to determine the cost of the capital principle. Either the individual rate over the national rate, maybe used. The rate should be compromised with the market weight average for the current nominal debt of the equity cost. Asset valuation related expenses. Similar with the capital cost, relevant with the application asset valuation related expense principle provided with the base of the determination value of the asset base with the consistent with the opportunity with the cost with the focus of the principal asset should be valued with the best alternative. Such values may be arranged with the zero cost of the current market depending on the particular circumstance. For each of the cases should be shown in three examples. Where the short run idle capacity is used, no alternative use for the existing assets exists. The assets value with the minimum rate of the purpose is zero. Where the equipment is used with the way liquidated before the movement of the traffic under the consideration that salvage value should be the appropriate valuation. When the traffic under the consideration is using assets, alternative transportation demand, existing current market value would represent the opportunity cost of such assets. All right, analyzing supported rejection changes to the application. The Interstate Commerce Commission established two measures for the use of the evaluating minimum rate responsibility for presumptive cost floor and the directive variable cost device. direct variable costs. The presumptive cost floor defined the sum of the line haul cost, landing, applicable switching costs, and station clerical post costs. As rates does not exceed the presumptive cost floor, should be presumed to be unreasonable. The direct variable cost is sum of the presumptive cost floor, any other cost proven the complying party to vary directly within the particular movement to which the challenge rate applied to the rate of equals the exceed the direct variable cost is a consequently presumed to contribute within any going concerning a value. A party wishing to challenge minimum reason for the rate of therefore by must prove the rate of which either the less for the presumptive cost floor and the greater than the presumptive cost floor will be less than the directed variable costs of the movement under consideration. The Railroad Accounting Principle Board considered alternatively general costing approach minimum rate and long-term canon cost. The presumptive cost preventive cost of the floor cost plus additional cost of the verified directly of the traffic issue, the time period for which the cost is determined would be handled on case-by-case basis. The what is it? Direct variable costs based on the variable cost exceeding the depreciation of the general purpose accounting system, specifically the cost of data applicable to a particular movement could be substituted with the general purpose cost system's cost. Long running incremental cost defined as all prospective operating capital cost is provided in the service. First alternative, the advantage of the sensitivity of the time of the period of the rate they are expected to apply with maximum because of the capacity related capital cost because of the flexible as long over the time period of the analysis increase. The first alternative permits a flexible need to incorporate relatively cost effective minimum rate and long canon analysis. The second alternative has a practical advantage prescribing the relative precise costing formula have not a variable the cost of the general purposing cost system would directly result with moving the traffic under the consideration conversely would be avoided by not moving such traffic. For example, the general purposing cost system variable must include the capital cost components which represent excess capacity which for the time of the period for the traffic that wouldn't be moved. Such costs would be irrelevant to minimum rate long canon costs. Third alternative incorporates long incremental costs that define with the preclude the analysis of the short run perspective as a result of the cost of the capacity rated include the capacity related capital costs which are not pertinent in the short run use. The cost of evaluating moments expected that these occur in the short run and unsupported but would appear to encounter with legislative intent to permit the pricing flexibility. The Railroad Accounting Principle Board believed the first alternative economically accurately approach to determining the minimizing long-term canon. One commenting party expressed concern performing the operating cost including the net value salvage value for the minimum long-term canon applications can result in higher rates perhaps the shipper to increase the degree of the difference pricing sought with the railroad. The railroad urged the Railroad Accounting Principle to minimum of the direct variable costs as the measure of the evaluating minimum rate responsible. The Railroad Accounting Principle can believe the consistent with the casualty principle, flexible, inherent with the recommended approach with the necessary for the unavoidable cost of the traffic under the consideration each of the costs incorporated with analysis of the operating over the cost of using the railroad assets, particular services, unavoidable cost, but it depends on, among the other things, at the time of the period for which the services provided. Example of the cost of items. Example of the cost items in addition with the the presumptive cost floor. Example of the cost of the presumptive cost floor is items specific landing, switching, lading, clerical costs, which include minimum rate cost, the terminal handling cost, the special service cost, the capital cost, the empty car cost, or movement cost. This is not intended to exhaust. These items would be included only if they are relevant to a particular movement at these times. With the exemption of these three specific presumptive cost of floor cost of the items previously mentioned, but the pertaining components of the minimized rate of the according to the circumstances surrounding each of the movement. Consequently, the Railroad Accounting Board has not attempted to identify the specific cost of items and cost formulas to be included or excluded with the minimum rate long-term canon costing, nor has it attempted to suggest any particular time period asset valuation methodology for such costs. The effects of the implementation. Application of the railroad accounting principles to the minimum rate case for the development of the long canon evidence does not require the change to present the Interstate Commerce Commission rules or procedures to the extent such rules or procedure exist. Criteria used for the Interstate Commerce Commission evaluate the minimum rate of the cases discussed previously. The case by the casualty from flexibility of the presumptive cost of the floor and the and direct variable costs, measuring capability application of the railroad accounting principles to these cases. The Interstate Commerce Commission has established rules for developing costing information for using and evaluating long canon factors. All right, railroad cost adjustment factor.